I'm just using it for the nini. Kwa invert kwa 11 to 11:30. Hope Zoom haina ile time ya kukata. Abonyeze kitufe.
Bonyeze ndio amalize.
Oh, YouTube pia imeanza. Uko Jonjo. So if you are chatting with WhatsApp, use WhatsApp.
Hata mimi ni CPA. Niliambia Maureen aweke. I'm also a CPA.
Hey, okay. I have to start.
No, it's okay.
Start recognizing CPA.
You know, if there's one profession, I think. Go karibu. Let's sit.
Good morning, members, and hope we are keeping well. We are here today, as promised. The day is here, and today we'll be covering understanding rental income, and we're looking at the obligations and planning strategies for individuals and corporate. Again, with me today, I have two certified public accountants. I'll start with the lady on my right.
Thank you, Collins. Good morning, everyone. My name is Regina Mwangi, as Collins mentioned, a certified public accountant of Kenya. I have been in the tax space for a little over 10 years, and I am the tax manager at Equity Bank Kenya Limited. I'm looking forward to having a very good conversation today, and thank you for having me, Collins.
Thank you. Gentleman to my left, introduction, please.
Thank you, Collins. CPA Martin Owero here, certified public accountant, managing partner, Nitram Advisory Africa, and we are happy to be back on the bench.
Thank you so much. My name is Collins Wanyonyi, Director for SME Banking at Equity Bank Kenya, an aspiring CPA. I've sat for those exams. Should I say this publicly? Should I say this publicly? Because so I sat for my Section 5 and got a refer, and I was ambitious. I did my Section 6. So I combined my Section 5 and Section 6. And those days, when you fail one unit in a section, you have to repeat the whole. So I got one fail in Section 6. And then that refer in Section 5 again failed. And I asked myself, must I do this? So I'm considering going back to just finish Section 5 and 6. Then I'll also introduce myself as CPA, and you will get to know it.
The famous without time.
Yes, the famous get out time, and the results will come in the post office. You wouldn't want to open those results immediately. Yeah?
I'm telling you.
Thanks. So let's get into the conversation. So last session we spoke about tax returns. There was quite a number of items. Any recap that you can give us, Martin, from last week?
Yes, you well know that we're in that season where now the self-assessments are ongoing. Employees who earned income the whole of 2025 need to file the self-assessment by having the P9A forms from the employers. And so that's done. The calendar year is January to December. For people in business, yes, they also need to do self-assessment. If it's a sole proprietor, they also file tax on graduated scale rates. If it's a partnership, the partnership will have to do the audit. Then the tax or loss is assessed on the partners. For companies, they also need to do the same, and the final day or time to pay final tax should be on. I need to clarify this, that it is the end of the 4th month after the financial year. Because then we then said, or we deemed that majority of the companies, or all the companies are January to December. No, financial year for companies differs depending on the time of incorporation. But for majority now, we focus for them to pay final tax by 30th June. By 30th April, sorry.
Thank you, Martin.
And file the returns by 30th of June.
Okay, thanks. Regina, any recap from last session?
Yes, we spoke about ETIMS and the requirement to be ETIMS registered if you're earning income in Kenya. We also spoke about the fact that KRA are looking to validate the incomes for 2025 when you're filing the return against the ETIMS invoices, the withholding tax credits, and also import documentation. And I remember my closing statement was a request to everyone to file their returns early this year.
Okay.
Yes.
And we said you have to give unto Caesar what belongs to Caesar.
Correct.
So today we are tackling residential rental income. And to our viewers, this is part of our 5-session series, where as Equity Bank will be helping you tackle in partnership with NITRAM, will be helping you tackle our tax, understanding tax. And we said there's tax planning, previously it was tax avoidance, there's tax, what?
Evasion.
Evasion.
Is wrong,
I was
yes.
trying to avoid the evasion piece. Yeah. So thanks. So today we're discussing rental income. So I don't know how, Martin, maybe you can ask you to just help us give a definition on rental income.
Rental income, by definition, is where you have a right to use or to occupy a space, either for dwelling, your own dwelling, which you may call residential, or for commercial space. It can be built or an open space.
Okay.
Yes, it is. That's what you may call rental income.
Thank you for that. Regina, is there a difference between residential properties and commercial properties when it comes to rental income?
Yes. There is different taxation for rental income and for commercial income. So for rental income, you're required to pay tax if your rental income for the year is 288,000. That's 24,000 a month, between 288,000 and 15 million. Yeah, 15 million, and the rate for that is 7.5% on the gross rent that you're earning. However, if you're on the commercial side, then that falls under rental income, which is taxed at 30%, but then you're allowed to take a deduction of the expenses that you've incurred in generating that rental income. So that is the major separation.
So maybe before we dwell deeply into the matters rental income. So earlier this week, there was discussions around special table. And I was asking myself, what was special about this table? And where was the table being placed? Martin.
Well, for us in practice, we have shared the same agony with our clients who happened to be placed in the special table. Special table was nowhere in the tax procedures, whatever. It was more of an administrative tool to compel compliance or to force compliance. And I can say that our clients, and I know people in business in general, have suffered because it took longer than expected. And when you are placed in that special table, and generally it is out of VAT, so you could not file your VAT on time. You're in business, and you just find yourself that you are not able, and you see majority of the people would start doing their VAT on 18th, 19th, or even the very 20th. And you find you can't proceed with the filing. So what that means is that then you start asking yourself what happened. You get to be notified that you're on special table. So you are not able to file the return for that month. And at the same time, your customers and suppliers are not able to claim back because you are not able to mirror each other. So it was a very stressful moment because then you had to start the journey of being lifted from the special table. Unlike where KRA gives a notice of intention to review your books, and they'll say records in our possession shows this and this. In view of this, we intend to carry out a review of your VAT transactions for the period this. That gives you time to prepare, and they would say that if you feel that you didn't have sufficient time, you would request for extension of the notice given period. So you are able to conduct your business normally without affecting the operations of the business. So it was a very stressful moment for people in business and charging VAT. And so as the tax committee, this has been our prayer to the commissioner, and we can say a prayer answered, meaning going forward, we can relax. But what the commissioner have emphasized is that for those fraudulent or missing trader who are still in that VAT fraud scheme will still be retained. And who is this missing trader, you may ask? Is a person, a company, what people call maybe a briefcase company, registered with all whatever, charging VAT, raising an invoice, charge VAT, but do not file in return. So this person is nowhere to be seen. And I think this is where now we are talking about ETIMS invoice validation, because ETIMS must go through the system of KRA. And hence, we are able to trace, there is a trail of this invoice. So if you purchase from that person, you definitely need to claim the input on that invoice. But this person will not declare this sale, and hence is a loss to the government as far as VAT income is concerned. So special table, if legitimate people or genuine traders are in business, they will not find themselves again in special table. Means now we look forward to an uninterrupted business going forward. We look forward that in case that would be the way to be returned, you'll be notified by the commissioner that we need to review this before you are placed to that special table. And such, it was a punishment to genuine, legitimate people in business.
Correct.
Thank you. So today we are going to tackle rental income. And so when I was getting ready for this, I looked at rental income from, there are actually probably to be about 4 perspectives. So the first perspective is rental income from a residential and rental income from a commercial perspective. Mm-hmm. But this rental income is being paid either to an individual or being paid to a corporate. Just to recap, there's a rental income for residential property or rental income for a commercial property. And that rental income is being paid to an individual or that rental income is being paid to a corporate. Is it treated differently? Regina?
Right. So how we look at it is from where the source of the rental income is coming. So you've correctly said there's a rental and then there's the commercial. So for the rental, there is a threshold, just like we have 5 million for VAT. So if you're earning rental income of between 24,000 a month, which is 288,000 per year, to 15 million, then you're required to pay monthly rental income, which you call MRI, at 7.5% by the 20th day of the following month. So for example, January 1st to January 31st, the income you've collected in that month from rental, residential rental income, 7.5%, you pay it to KRA. You file your return and you pay it to KRA. On the commercial end, on the other hand, it's treated the same as business income. You do your collection of the rent, you take any expenses that are allowable. And by allowable here, we mean any expenses that were incurred in the generation of that income. So for example, you have maintenance, you have caretakers, you have a property manager, for example. Such expenses are allowable for tax in that perspective. And then additionally for residential rental income, if you surpass the threshold of the 15 million, then you go to the annual, meaning you stop filing the monthly and you do it once a year now, and then you're allowed to take a deduction of the expenses. And this is at 30% now when you surpass the 15 million mark. Yes.
So let me clarify. So what I need to do is aspire to be collecting more than 15 million.
Yes.
Because if I start collecting more than 15 million as a residential property, I can deduct expenses,
You
my
can deduct-
caretaker, my cleaning,
Yes.
and all that.
Yes, your maintenance.
So will you then say that the taxman was trying to create my ambition to move from collecting 288,000 to start collecting 15 million?
But remember also the rates are different. So if you're between the 288,000 and the 15 million, your rate is 7.5%. That's what you're paying to the taxman. If you go to the past 15 million, it becomes 30%. So fine, you're allowed to take a deduction of your expenses, but at a higher tax rate.
So I should play at what
No,
people say
ambition
ligindogo.
continues. Ambition continues.
Yeah. So the bit around whether this tax is the receiver of the rental income is a corporate or the receiver is an individual, is the treatment different? What I've heard you explain is the bit around residential property and commercial property. What about if the receiver of the rent will it be treated differently if it's an individual or a corporate?
From my perspective, no, but I'd like Martin to take this one.
And maybe before Martin comes, I just want to encourage our viewers. If you have any question, please share with us questions on chat. We'll endeavor to answer as many of your questions as you can. If you have any questions, please share with us on chat.
Regina has said it, and maybe what I may add is where we have a mixed use property, and we have seen this in the estates, where maybe the ground floor is more business. There could be a supermarket there occupying the whole floor, and then up the other floors is residential. So that mixed use is then need now to determine, because if the commercial part has the threshold of 5 million, then it means you need to register for VAT. And as such, then it calls for proper structuring of your operations. Because even apportionment of expenses then need to be looked into. And that gives the question, Regina, of we are talking of if you are above the 15 as an individual, you then need to claim the expenses. We have just, last time we were mentioning about validating expenses and income. It then means even if you are an individual landlord, you are above that threshold, not even when you are above that, you are supposed to generate your rental invoices through an ETIMS. So that even the expenses that you'll be receiving, remember she has mentioned about repairs and maintenance, you'll go to a hardware, which then you'll need to have a genuine ETIMS invoice for expenses to be claimed against the income. So we must match ETIMS invoices and ETIMS, expenses.
Yeah.
Simple way, as a firm, we can now guide individual landlords on how easy, for those who are below the 15 million threshold, and they are under MRI, they are within the MRI, on how to comply with the ETIMS validation of income and expenses, and both also to the companies.
So what kind of expenses are acceptable to be deducted from rental income? So when I'm going to if I'm to deduct any expenses, assuming I'm doing like from the commercial, then I have to do some deductions. What kind of costs are acceptable to be deducted?
Mainly, what my experience and my exposure, the rental income does not have very many expenses, because you can count them. It's repairs and maintenance, and these are just small maintenances. Then you may have caretaker. You have caretaker who is, quote unquote, like an employee, your employee. You may have security. You may have water. You have water, you have lighting for the common areas, because then you don't pay water and electricity for your tenants. So it's more of maintaining the common areas expenses to make the premises habitable. All that which is valid. There is a time that I remember we had a review of a rental income. And by mistake, I think there was an expenditure of air travel. So that was a misplaced expenditure.
Yes.
But Martin, if I have to fly from Mombasa to Nairobi to come and see my property, isn't that an expense that I can put on that?
I think that one you really have to convince the taxman.
Exactly.
The underlying principle is expenses that are incurred in the generation of your income. So it's very easy to pinpoint that I did repairs for the unit.
Yes.
I hired the caretaker for the unit. I have property managers for the units. Those ones are very clear.
Yes.
This other one, I think you
If-
really have to.
So if I didn't have this property, I will have no business flying to Nairobi to come and see, because probably the quote on the rental agreement says I have to view the property every quarter. That is what is listed on the tenancy agreement. Now, for me to come and have a view of the property every quarter, it means, and I'm based in Mombasa, it means I have to fly to Nairobi. So that is a cost.
As Regina has said, you need to really demonstrate that
That I paid for the ticket.
there are people who are investors and they have invested in different places of in the country.
Yeah.
And so they're in Mombasa, they're in Kisumu, they're in Nairobi, they're in other parts.
Yeah.
And as such, if to go and visit your property, you have to fly out to use air as an expense to get to that destination, it is okay. But you really have to show. Because even in the returns, the property locations are there. And that is why this topic is very important, because the commissioner has really learned that there is massive income leakage
Correct.
on the part of rent.
Rental income.
And so, geolocation, and we mentioned about technology. Geolocation integration with the Ministry of Lands, with the county governments when you are paying rates, easily notifies the commissioner where the location of the property is. And as such, you can't say that you're free to Kisumu and at Kisumu there is no property.
No, I can demonstrate that I live in Nairobi. I show my documentation to show this is my physical residential address. I can show the taxman my title deed, and I can show the taxman that this is where I live. Then I can show the properties in Kisumu. For this discussion, then I demonstrate to the taxman that on the tenancy document, I have indicated that I have to visit this property every quarter to ensure that it is in good
Good
state.
order.
Then I justify.
The expenditure is legit.
Yes.
And it is genuine in the supervision of your business as the owner. So it is okay. All what we are saying is you really need to prove that it was in the course of generating that income that you incurred that expenditure.
Thanks. So one more item on cost. So land rates and rent.
Yes.
Is that deductible as an expense?
Very,
Yes, it
very,
is.
very, very.
Yeah.
It is.
The only challenge we have, as we said last time, the rates are being paid to county governments who are also not giving ITIMs. So,
But at least I can deduct it as an expense.
yes, you can. And then we explain ahead in case there is that review.
Okay.
Yes.
Yeah.
So one more item that I was looking at is on the rental income. And I'm still asking my viewers to share any questions they have on rental income. My feeling is 7.5 is on the higher side. And probably that is why compliance is low. Do you think there's room to reduce that to 1%?
Actually, it was 10%.
Yes.
And the 1.5 is what now is actually, as an individual landlord or lady,
Lady.
you pay 7.5 as the MRI, and the 1.5 you pay to housing levy. So it's still at 10%.
So housing levy is also on rental income.
No,
Uh,
you are supposed to contribute as, so housing levy is contributable by every person who has an income. And as such, that is why we have the integrated statutory returns, where you are paying MRI, you must also pay housing levy. Where you are paying pay as you earn, there must be.
Housing levy.
Yes.
okay. I only thought housing levy is being paid by people on pay as you earn. So,
The individual earning income in Kenya.
Yes.
okay. So do corporates also do housing levy when they're paying the corporate tax?
No.
Because that is income to the corporate.
No. Individuals are the
It's
ones.
only individuals.
So yeah, when you have your pay as you earn, under the pay as you earn now is what Martin is mentioning. You'll have
A deduction.
the deduction for the individual that you've.
So where I'm coming with this question is, if the recipient of the rental income is a corporate, right? If that housing levy is based on an individual, and the recipient of the rental income is a corporate, so then it means that corporate does not pay the housing levy because it's
MRI does not apply to corporates.
okay. It doesn't apply to corporates. So I am a company. My company is called Collins Limited.
Okay.
Collins Limited has put up rental units. Collins Limited is the one that is receiving rent, not Collins Wanyonyi. Collins Limited is the one receiving rent. So when the rent is payable to Collins Limited, and then Collins Limited is within the tax bracket of 288 to 15 million, then Collins Limited is paying the MRI at 7.5. Am I right?
Okay.
Collins Limited.
Okay. Okay.
So remember, there is Collins Wanyonyi, but there is Collins Limited. So Collins Limited is the one receiving rent, as much as the building belongs to Collins Wanyonyi. But I've decided I bought property, I bought a piece of land, registered the land as Collins Limited. I put up a block of flats. I went to Equity, and Equity Bank gave me a loan to put up the building as Collins Limited. Then now I'm paying tax for the building. It's below 15 million. So I'm collecting 1 million shillings a month from the building. And I'm paying the taxman 7.5% of 1 million shillings every month. So am I eligible to pay housing levy? Because you've said housing levy is paid for by individuals.
Yes, Collins is eligible to pay housing levy.
Collins Limited.
Collins Wanyonyi.
But Collins Wanyonyi is not the one receiving rent. The rental income is being received by Collins Limited.
Yes. So where a corporate has employees or so Collins will be separate. Collins
Yes.
will pay
Collins
housing
Wanyonyi.
levy.
Yes.
But Collins Limited will not then again be required to pay housing levy.
Okay.
That will be, yes.
So, in the spirit of tax planning, I will then say it will be safe for my viewers to invest in their rental property as Collins Limited, so that they get a chance not to pay the housing levy as corporates, because it's being charged to a corporate. I'm just trying to give my viewers.
So remember that you investing in Collins Limited does not exempt you from paying housing levy. So even if the individual registers Collins Limited, they will still have to pay housing levy. They, as the individual, will still have to pay housing levy. So it's not really, I can't really call it tax planning, because at the end of the day, the government is not losing out. This individual Collins is still paying housing levy. is not lost.
So Collins will pay from my salary, and my employer will do auto deduction at source and pay. Yeah. So anything else that we just need to look at from our tax? I'm still reminding my viewers to share any comments on chat, that questions that would like answered by my eminent persons on panel.
So maybe for clarification, the corporate that you are mentioning, we need to look into who are you in that company, in terms of do you have an employee, because
Director and shareholder.
do you earn an income?
Yes,
Because
I
there
will.
is the matching, there is the matching part of the employer-employee.
So when I'll be doing my tax return again, here as Collins Wanyonyi, I will go back to, there's an expectation for me to indicate rental income on my annual returns, or income from other businesses, right? Just going back to checking. So I'll indicate I have income from business. So I will do my total income from the company, which will be 1 million less 7.5 every month. That will be income, right? And at that point, I'm also want to ask, this 7.5 doesn't allow me to deduct interest from the mortgage because I borrowed money from equity to put up this building. So the taxman wants to get the 7.5, then I go still fight with the interest.
1.5.
Okay.
No, not 1.5. I'm looking at interest because I borrowed money from Equity Bank to put up the building. Now I'm collecting rent of 1 million shillings, but I also have to pay Equity 500,000, of which 100,000 is interest.
Okay.
So at what point do I factor in my interest? So this 7.5, I just have to struggle with my interest.
Okay, yes. 7.5 is final, meaning it doesn't have to show up in your return at the end of the year again. Once you do your 7.5, you don't claim any expenses, it's done. No more. It shall not feature again in your return when you're doing your return as Collins Wanyonyi, employee of Equity Bank Kenya Limited. It will not show up again. However, on the issue of expenses, because what I am hearing is that you would like to claim some of these expenses, including interest on the mortgage. If you fall under the bracket of the MRI, the 288,000 to 15 million, and you feel that you would like to claim these expenses, you can write to the commissioner and request him
Exactly.
to allow you to go to the annualized system of filing returns, and therefore you're allowed to do the 30% and take the expenses. And this interest will be some of the expenses that you'll be allowed to take. So fine, there's a threshold of the 288 to 15 million, but if you feel that your expenses are too many and you would like to take advantage of them, you're allowed to write to the commissioner and request him to move you away from the 7.5 final to now the 30% one, which will allow you to deduct all the expenses, including your interest on mortgage.
Oh, thank you. So then I move to the 30%.
You move to the 30%.
So you have to weigh your which side of the cake you'd like to.
Correct.
Yeah.
Move on.
So I have some comments from our viewers that I'd like us to discuss as we progress. So I have Laurel Auma, who is say, please discuss the use of IRITS system among property owners who pay MRI. Is it compulsory like the use of eTIMS for other businesses? If a property owner is not registered on IRITS, I'm hoping that I'm pronouncing correctly, are there possible repercussions in the future? I understand that MRI is optional for rental income and up to till 15. So does IRITS become optional as well?
Okay.
Those are many
Yes.
items. Eh? So I go step by step. Eh? So let me do the first part. Please discuss the use of IRITS system among property owners who pay MRI.
Okay. So I'll start by speaking on what the IRIT system is. So in full, it is electronic rental income system, which was put in place by KRA to help in the management and compliance angles of rental income, individuals with rental income. So the idea is just to help you it's like a platform to help you put in the rental properties that you have, the income that you're earning. It will help compute for you the tax you're supposed to pay and help you to file your return and make your payment. That's it. So I know it was brought in last year. I have not seen any requirement for it to be mandatory as of now for property owners. Yes. So it's just a system to help you in compliance and making work easier for you in complying with rental income taxes.
So you've answered the second part, which is it compulsory, like the use of e-teams for other businesses? So the next part of that question is, if a property owner is not registered on IRITS, are there possible repercussions in the future?
Well, we look forward that KRA is now doing what we may call targeted enforcement. So with the introduction, and I would want to put a rider on that, where someone was telling me, I was applying for tax compliance certificate, TCC, but because I don't have e-teams, it could not get generated. Meaning, KRA has tagged e-teams compliance with the main tax compliance certificate. And hence, despite this not being kind of very mandatory at the moment, it is maybe in the silence of the grace period for adoption. But once the full enforcement in the property, rental income, geolocation, and all that integration with the utility companies, the water, the power, even telecoms because of the internet in the apartments, with all that integration, even this rate system will definitely come. And also, I look forward that KRA will also have enforcements with estate agents. And you see, there is an act that regulates property management through the real estate agents registration board. So it then means that they will be compelled that this is a must use.
Okay. So Hilary Kosgei is asking, kindly revisit on the threshold of 7.5% and 30%.
Okay. So the 7.5% is on residential rental income, where you're earning residential rental income between 288,000 per year to 15 million per year. When you go above that, then now you move to the 30% regime. Remember, for 7.5, you're not allowed to deduct any expenses. It is a final tax. However, when you go above the 15 million, then you move to the 30% where you stop filing monthly. It becomes now an annual tax. And you're allowed to take a deduction of the expenses that we've discussed that are allowable because they're used in the generation of the said income. So for monthly rental income, once you hit the 15 million threshold, then you move now to the 30%.
Okay, thanks. Hopefully Hilary and Laurel have been answered. Samira Mohammed is asking, when we have commercial rental properties, as in a corporate has rented your premises and you have not reached the VAT limit, how do we treat this?
VAT registration is twofold. One, voluntarily, and number two, the compulsory, where you have reached the 5 million threshold. For him, he's below 5 million, but then what would determine the registration under the voluntary is, do you have expenses that have VAT input, and so you need to claim against that. So there is no harm to do VAT registration voluntarily, even if you have not got to the threshold, for purposes of claiming the input VAT incurred during the expenses.
So what kind of VAT is incurred in a rental income?
For example, a very good expense is that of repairs and maintenance. Even if it is normal and the amount is significant, or the material is, the expenditure is material, for VAT purposes? Or do you have a routine expenses that on monthly basis you have a significant
VAT
expenses that have input VAT components? That is what would then one determine. Should I do voluntary registration or do I wait?
So there's George Wanyoike is asking, are there tax exemptions for people with disabilities? And Regina, as you answer that, please use the mic closely.
All right, thank you. Thank you, Collins. So for people with disability, they are exempted from income tax where, first of all, you have registered with the body for persons with disability and you've gotten an exemption certificate. You've registered with KRA with whatever you've gotten from the body, and KRA has given you an exemption certificate. So using that, then you can be able to deem that you're exempt from the tax. And at least now, whenever you're asked, then you can be able to provide the exemption certificate in support of the same. Yes.
Okay. So here is an anonymous attendee who says, does it mean MRI below 24,000 is tax-free?
Yes.
And there's a rejoinder from another anonymous attendee. Then why does KRA follow owners of small rental incomes of 6,000 or less per month while they have huge chunks of money not collected out there? Here I'm asking for an anonymous attendee.
All right. Allow me to take this one. So if it's an individual earning the income of 6,000 per month, for example, based on the question, you see, if it's an individual, then your taxation is based on the graduated scale. And any incomes below 24,000 are exempt from tax. So even if you take the 6,000 and put it across the graduated scale, there will be no tax to pay. So really, it is exempt from tax because it's not exempt from tax, it's just that it doesn't hit the threshold for taxation.
So what this person needs to do, if I listen to you, is they need to go to that IRITS. Hope I'm calling it right. You know, I'm not a tax. So when I go to IRITS, I register and then show that I'm getting 6,000 shillings consistently so that when the taxman comes, I'll tell him, this is full declaration.
Yes, keep your records.
Okay.
Keep your records.
Yeah.
Yes.
So I think we've answered this, but I'll just say it so that we are sure that it was not answered. It's also again from an anonymous attendee. Also, if my annual rental income is above 5 million, am I required to register for VAT? Martin, you spoke about it.
Come again?
If my annual rental income is above 5 million, am I required to register for VAT?
Annual income above?
Annual rental income is above 5 million. Am I required to register for VAT?
5 million per what? We are talking of...
It's annual.
Annual.
So if you say annual, then it's for the year. So cumulatively, he collects 5 million shillings a year.
Yes, you are supposed, but VAT is on commercial. So is he in commercial?
Okay. So maybe we could just guide them that if it's on commercial,
Yes.
then we'll do VAT.
Yeah.
Yes.
Okay, thanks. Agnes Irimu. So all services offered for maintenance should have an eTIMS generated. So a plumber, e.g., needs to generate a KRA invoice.
Ideally, yes. So, and this is how, and this is how KRA is sort of going to catch everyone. Because the next time you go to seek for a service, and because you want to deduct this expense, the first thing you'll ask is, are you going to offer me an eTIMS invoice so that I can use it to claim if I have if I'm at the 30% threshold, which is allowing me to deduct expenses. And slowly, everybody will become compliant. So if you're planning on deducting those expenses, you had better ask for the eTIMS.
Okay. But in our last session, Martin told us that you can put a schedule. There was a schedule, Martin, you spoke about when you are dealing with people who can't have eTIMS. You can put up a schedule. Maybe you could just recap that.
We said the year 2025
Yes.
is the base year
Yes.
to not penalize or to not punish the people who did not validate their expenses through eTIMS in the year 2025. We say that the commissioner in the IT2C form will provide an extra worksheet that any legit, genuine expense that was not validated through ITIMS will be stated there. Okay. Thereafter, 2026, this year, that which need to have been validated need to have been generated through ITIMS.
Okay, so Agnes, you've gotten it's only this year that you can do that. After this year, you need to ask your plumber to have ITIMS.
And come to think of them, where we have a block of a building, and you have those fundis of doing tiling, or even painters, those who are doing paint, or even the carpenters who are doing the wardrobes and all that. That's labor contracting. So it then means that the developers will be very wise, need to be very determined to ensure that to validate the cost of the building, need to have valid expenses. And especially where we are talking of a commercial setup, that those who may be seen, quote unquote, informal but very experts in their area of work. Talk of plumbers of a whole building. They may say they are labor contracting. So they may be compelled to be registered as in business way so that they generate, because this is labor, and so it's not more of a wage, it is labor. So they will charge you. And for that, a valid ITIMS expense for that is required.
We spoke about this, and that conversation was about flying. Now, somebody has asked it. Can you claim fuel to go see your property? Also, if not directly, can you claim this under the maintenance costs?
Fuel is local traveling, and yes, it is a genuine expense. All what you need is an ITIMS invoice from the petrol station, from the fuel station. Yes. You see, it's the use of personal vehicle is a thin line between private use, ventures and that of going to see your property. So it's a thin line. And as such, if it is so significant, the commissioner might decide to apportion the component of that expense. If, remember, we still, that is a person who is in the normal, the 30%,
okay,
where the expenses.
So I have to go to 30% for me to bring
exactly.
That. And Regina cautioned me and told me, remember, you're moving from 7.5 to 30%.
Correct.
Thanks. This one is a long one, so Regina, you can listen to it keenly. It's from Hilary Kosgei. On organization, I think it's one organization has leased residential building for purposes to house its essential service staff. The lease payable quarterly, should the organization withhold VAT and income? Where does the 7.5 or 30% fall in this case? The organization is appointed withholding tax agent.
All right. Okay, so
it's clear.
Just a recap. So they've leased a residential property to house their essential services staff.
Yes.
The
lease is payable quarterly.
Okay, it's payable quarterly.
Then the question is, should the organization withhold VAT and income?
And income. And they are also...
Where does the 7.5 and 30% fall in this case?
They are agents also.
Yeah, the organization is appointed withholding tax agent.
Withholding rent or withholding tax?
Withholding tax agent. That's what Hilary has written.
All right. So residential rental income does not attract VAT.
Yes.
So even if the owner of the residential property was to raise an ITIMS invoice, it will not have an element of VAT. And so because of that, there will be no withholding VAT to withhold in the first place. Yeah. And then since this is not an income, it's an expense on their end, they will just, if they are withholding rent agents, then they withhold at 7.5% and pay the rest to the landlord. However, for VAT, withholding VAT, there's no element of that because even in the first place, the landlord will not charge them VAT.
Okay.
So I hope I've covered everything. I don't know if I've missed something.
Martin wanted to say something.
Well,
On
yes,
that.
I just wanted to say that residential properties do not attract
VAT.
VAT.
Thanks. So there's John Jau who's asking, is the taxpayer filing monthly MRI required to file any return at the end of the year?
Yes, just for confirmation that you have done what, because it's like he is required, to be precise, is
Yes.
required. But with the continuous automation, we look forward that even if you don't file, you see, it is a statutory obligation to file return. So where we'll have full compliance with even like employees do not have additional income other than that of the primary employer, and so they may not have other income. So they may not be required to file the return. Those would be the changes that we look forward to. So even in the MRI, if this is your final, if this is the only source of income that you have, and you have filed MRI on monthly basis, you may not be required then if the law
future.
changes.
If the law changes,
But
yes.
for now, proper to file the return,
Both the monthly and the
And
annual. And I
yes.
think, Collins, if I may,
which consolidates now the 12 months period.
if you're registered for MRI and you happen not to have rental income for one reason or another, you're still required to file the nil return. So there's the monthly and then there's the annual that Martin is talking about.
Okay.
Yes.
And I'll come to that. So to my viewers, as I can see the comments are coming quite fast and furious. For those that we've already tackled, I'll skip them. You'll not see me mention your name because some of them have already been tackled. So don't worry that I posted and my name was not called out, just in case you feel like I've jumped your name. But Emmanuel Lewis is asking, hello, my name is Emmanuel Lewis. I want to know, how does taxman know incomes from rent if the property is not registered?
Well,
Will you say it's because you do a self-declaration?
you are only a customer of Revenue Authority if, number one, you have a PIN. And so as long as you have a PIN, you are supposed to file the return. Hence, if you have a property and it's not registered, it is in those efforts that KRA is now working towards ensuring that all the registered properties with the Ministry of Lands are brought to book. And as such, it will have the connecting name. So, and I look forward that that one of the finance bills will bring in amnesty on
Rental income.
on rental income, so that people can come forth and say, I have had this on property which I have not been declaring, and so I come to be counted.
And don't charge me
And
historical.
don't charge me historically.
They will
So-
get quite a lot of people coming.
Exactly.
They will. There's
Yeah.
actually quite a big deficit estimated in terms of rental income.
Huge.
A very, very huge income. There's some statistics are looking at for last year where the collection is around 17 billion on rental income, but it has the potential to go to 100 billion.
So-
Meaning there's quite a big
So
gap.
Martin,
that
when you meet
KRA
the
is looking
taxman,
to
tell him
cover.
to tell him. Martin has coffee with the taxman every day. So Martin, tell the taxman, give amnesty
They will
for
come.
to that. Money will pour like droves. I saw that they have a deficit of their targets.
Maybe in the forthcoming finance bill,
Yeah.
you never know.
Yeah.
Oh, it has to go through a finance bill for
Yes,
them to give
yes,
an amnesty.
yes, yes.
Okay. How many months to finance bill?
You're almost there.
Almost there.
Yeah.
So
Almost
they
there.
please
We have been
whisper,
called,
whisper to them, and they will.
we've
They'll,
been called by ISPAC, by Treasury for submission as ISPAC. So
exactly. So when you go in, on behalf of my members,
okay.
yeah. So Ruth Waithaka is making a comment here regarding land rates and other payments to government institutions that do not issue tax or ETIMS invoices. These expenses may be disallowed at the end of the financial year when filing the tax return, resulting in a higher tax liability for the taxpayer. She seems to say there's a lot of authority.
We said that that KRA knows how well to fight with their fellow government-to-government related entities. So it is a genuine expense, so it needs to be claimed, maintain the receipts. And Collins, maybe as we talk about that, there's a component of sale of property that may be having rental income. And as such, there is an element of CGT. So in that space, people also need to know when they have sold a property that they have been earning rental income, they would rise the CGT, capital gains tax. That's one of the things to note. We also need to notify our viewers and our clients that where this property is inherited property and you happen to dispose, then there is also the timelines and there is a procedure that you need to comply with upon transfer, when you're transferring this property. An inherited property, inheritance has no value. And now you want to dispose. So you need to undertake a valuation, which then gives you the market value of that property at the point of inheritance. That way, you'll now be able, and you are selling, you'll be able to now determine the capital gains tax against the selling price, less the inherited market price, and other adjustments of genuine expenses like that of valuation commission, agent commission, legal fees, and all that. Then you determine the CGT at 15%. And that valuation need to be done within a 5 years span.
Thank you. So my viewers, if you've joined us as we progress, we have a panel here. Regina, who is a tax manager at Equity Bank, and we have Martin, who is the MD of Nitram Advisors. We are tackling rental income for corporates and individual, and we are looking at just understanding rental income. And we are tackling a number of questions that are coming up, and hopefully we've addressed some of the items that you have. So Regina, Henry Mwevia is asking, it is not clear on housing levy and corporates. A group of friends pool resources together to put a flat under a limited company. Rent is below 10 million per annum, and so they pay MRI. What is this about housing levy under these circumstances?
All right. So there is the individuals. All individuals are required to do housing levy at 1.5%. For the organization, if it has employees, then the organization will withhold or deduct at source the 1.5 and remit to the Revenue Authority. However, if it doesn't have employees, then that stays, and the 10 individuals are the one to cater for the 1.5% and remit it to the Revenue Authority. Yes.
Okay, thanks. So Ruth is back, Ruth Waithaka. Secondly, petty cash expenses such as transport for which ETIMS or tax invoices are not issued may also be disallowed when filing the tax return, potentially increasing the taxpayer's overall tax liability. Kindly advise on this. And here I'm looking at transport, because you have to leave the building. The caretaker has to leave the building, or whoever, to go to Kenya Power to
Yes.
pay for power bills.
But remember, power, you can also buy tokens.
No, I'm
At
issuing a
the,
check.
at the comfort of your
I have a prepaid meter, so I have to
okay.
go with a check.
What we are looking forward to is you really need to maintain proper books of accounts. You really need to maintain records for any legit business expenses that are to be claimed against the income. So if you are to be asked of the records and you don't have, it may be disallowed. However, a legit expense it would be.
Okay.
So proper records.
Proper records. I think the secret here, listening to you and also to Regina, the ultimate is proper record keeping.
Precisely.
Okay.
And if I may, I think even from KRA's perspective, they don't have everything figured out on e-teams and the validation of income. They are working as we go. So some of these questions and some of these challenges that we're facing, they're going to correct them or find solutions to them as we go. Yeah, they have admitted that also.
Yeah, yes, and also, Collins, look at the situation where gone are the days where you could not find a pay bill in a matatu. So our matatus have gone, the public transport have also gone cashless. So if then you can be able to trace if it is really a continuous whatever transactions, you can always maintain that
Thank you.
record of mobile payments.
Thanks. So Jeff Mugo is asking if they opt out of MRA, I think it's MRI, yeah? To be taxed under the annual income tax regime, can they trade as self-employed or do they have to register a company?
I think they can still trade as self-employed. Remember, all you need to do is just write to the commissioner and ask him, request him to allow you to do the annual payments as opposed to the monthly ones.
Today, so many comments are anonymous attendee. I think you say they want to move to tax agency or tax what? Kenya Revenue
Services, yes.
From Kenya Revenue Authority.
Yes.
Hey, these authorities making people go anonymous. Mr. Taxman, can you become a service quickly? Because everybody here is telling me he's anonymous.
They don't want to be known.
Yeah, so Carol Mbutura is asking what types of disabilities qualify. And I think it's a rejoinder to the question about people with disability. I think, Regina, you're the one who
Yes,
answered
I'm
that.
the one who answered that. Well, I'm not in a position to classify what falls under the disabilities, but I know the body is maybe probably better placed to guide on what falls under that category, or maybe in case, Martin, you've had an experience on...
Well, precisely that, because disability should be noticeable. And you are, it limits your productivity, and as such, then it's more of a relief. So, and that is why to have genuine people being allowed not to pay tax, they must be vetted by the body, and they have that certificate. You may be seeing people on wheelchair. You may see people with also an arm that maybe visually impaired. Such it must be kind of confirmed.
But there's a body. There's a body in the
yes.
country that is
Correct.
Yeah. So probably the only thing I'll tell Carol is there's a body. I don't know the body of the name of the organization.
It's on
But there's
Wayaki Way.
It's on
Yeah.
Wayaki Way.
Yes.
Yeah. So Carol, visit the organization on Wayaki Way. Google. It can be a friend to be able to help us on that. So there's quite some bit of interesting questions here. Allow me take this one. Just a minute. What are the consequences of defaulting on paying MRI as a landlord or property owner? Can KRA attach or auction your property?
Eventually, yes. So first of all, if you meet the threshold for MRI and you fail to register for MRI, there's a fine of 100,000 for each month that you have failed to register. Okay? So that is if you've not
A
registered.
fine of 100,000 for each month you
Yes.
have failed to register.
So assume January, February, March, you are doing 23,000 per month. Then you hit April, it goes to 30, 40. You see, every month that you don't comply with the registration is 100,000, 100,000. That is that. Then there is when you fail to file your returns, for individuals is the higher of 2,000 shillings or 5% of the tax due for that month. For individuals is 20,000. For corporates is 20,000 shillings or 5% the higher of. That is when you fail to pay. And then now a 1% interest per month, the rental tax is outstanding.
Okay.
Yes.
Also, the compliance, the cost of non-compliance is quite high.
It's quite
Very.
high.
So if I may ask, and here I'm asking for a friend, if so now that you've told them that the penalty is 100,000, and this anonymous attendee then decides to go and register today, does he have to go and declare that previously? He can just silently register today and start paying today and stay safe.
Well, I cannot guarantee the safety. And here I'm speaking in low tones.
Yeah. So I'm just trying to imagine. So I can, when somebody goes to register for MRI, is there a question somewhere that asks you, have you been receiving rent for the last, you said tax is pushed back to the 5 years, right? Is there a clause somewhere that asks, have you been receiving rental income for the last 5 years? Is there somewhere it asks?
Well, remember you opened for audit the past 5 years. So it's
But when you're registering, there's no way it asks you. So I can just go register
Yes.
and then silently start paying
Yes.
and pray that amnesty comes.
Uh-huh.
Yes.
Then I declare I used to have.
yes.
Yes, and there should be a record that would be relied on,
Yeah.
such like the bank statements, how you have been receiving this.
It's
Because
okay.
it's not just from nowhere. There must be a paper trail.
See, I go open a bank account today. I've been receiving on M-Pesa. Now I go open a bank account. I go to
We'll
Equity
use the
Bank.
M-Pesa statement.
So I go to Equity Bank today and open an account and then tell my tenants, go to Equity.
This is
or
where you'll be
pay with
depositing.
Equity. 247. Account number is this. Right?
Yeah.
Yes.
Yeah.
Oh, and I think let me just add something on the M-Pesa statements and the bank statements. So when KRA do a review of your rental income, they'll ask for those papers. They'll ask for bank statements. They'll ask for M-Pesa statements. Remember, if you happen to have any deposits in those accounts that you cannot account for, KRA will take them as income. So, for example, you're contributing for a friend's wedding. Everybody is sending you contributions. You forgot. You can't even remember who was sending you money. KRA will take that as income.
Hello?
Yes, you sold some goats somewhere. They sent you money, 100,000. You forgot what it was for. You cannot explain that it is not rental income. So it's very important to keep very clear records of the bank statements and M-Pesa statements. Segregate. This is for my personal use. This is for
Business.
This is for business.
And on that note, remember, there is usually the deposit collection from the tenants. So that,
Yes,
that
talk
should
about it.
not be accounted as income. It's a refundable deposit, which is a liability on the part of the landlord.
Actually, you brought up something that I was actually just seated here thinking about. So landlords ask for 2 months deposit, 3 months deposit.
Yes.
So that money, it's you have to put it aside.
Yes.
You don't account it as income.
No.
Okay. But if at the time that the tenant is leaving and there's repairs and maintenance that have to be done, and you use that money to do the repairs and maintenance, how do you treat it? As
As
an income? Because so my landlady is Regina.
Yes.
I pay her 25,000 a month.
Yes.
So she asked for 2 months deposit. So she's
50.
holding my 50,000.
Yeah.
Then when I'm leaving that house, she observes that I've caused damages worth 30,000.
Yes.
Then she spends 30,000 shillings to fix the house, probably then refund me my 20. So this 30,000, how is it treated? As income?
Yes, you recognize it as income now.
But it was just making maintenance, repairs and maintenance.
This is now you would have received 30,000 separately from the tenant, or they have the option of them repairing to the standard expected as they got the property, and so you return the 50 intact.
But this is the case. When I was paying Regina the rent, I gave her 75,000,
Yes.
being 50,000 deposit and 25,000
Yes.
rent.
Yes.
I have stayed there for 5 years. Now I'm leaving, and Regina feels, yes, these damages are worth 30,000.
Yes.
The money is already, I'm already holding the money in, call a savings account.
You recognize now from deposit to income.
But it's not income.
It is.
It is.
Mimi sijatajirika na hiyo pesa.
You pass a journal. You pass a journal.
Ipasa jana. Thanks. Is an ETR invoice compulsory for a company to deduct the expense from its profit? This is Hashaka. Is it Harshaka? Hashaka. The second name is not very easy for me to pronounce. Is an ETR invoice compulsory for a company to deduct the expense from its profit?
Yes.
I don't think this is related to rental income.
To rental income. Yes, it is. Remember, we're moving to where KRA is validating your income and expenses using 1, ETR invoices, 2, withholding tax credits, and also import documentation. So it's looking at those 3 sources to be able to validate what your income and expenses are. So yes, it is important for you to have those ETR invoices for expenses, unless they are exempt from the list. They're in the list of exempt for what is exempted for having ETIMS invoices. Examples of include salaries and emoluments, interest income, air tickets, and the likes. So there's a list of what is exempted from ETIMS invoices. But if not, then you're required to have ETIMS invoices too, to validate your expenses against.
Okay, thanks. So there's quite some bit of questions here I need to tackle, and I know we have to close at a dead of the minute. Still have some few minutes. This one is a long one. And the person is called Callistus. We share a surname, so he's my brother.
Oh, nice.
Yeah. Callistus is asking, I have a question regarding the monthly rental income MRI filing. Last year, I received a tax assessment from KRA because my filing was considered incorrect. The issue arose because I declared less tax in months where some of the rental units were not occupied by tenants, meaning no rent was collected for those units. My question is, when filing the MRI return, should landlords still declare the full expected rental income for all units, or only the actual rent received from occupied units? I want to avoid future issues with KRA assessments due to the filing format.
Okay. Thank you for the question, Callistus. Well, you should only declare the income that you actually earned, because saying that you're going to declare all the expected income will leave you at a deficit because you never really received some of that income. What I would advise is to keep a record of how much you're earning. So, for example, an Excel workbook saying I received from Mrs. Wambugu, I received from Collins, I received from who, this much, this was deposit, this was water, this was electricity. A very clear record that tallies with your bank statement or M-Pesa statement, and also speaks to what you filed with KRA and what you paid. That way, even when KRA come and say that you had some income and you actually didn't receive it, you're able to prove from your bank statement, from your Excel, which also speaks to your returns. So I think what is clearly coming out is record keeping is very, very important for this exercise.
Thanks. And Martin, I'll throw these at you. This is from Wangui Mukanu. So I have rental property below 5 million. I'm assuming, let's assume this is for the year. Or we can say let's take it for the month, so that, because she's not specified. So I have rental property below 5 million. I do MRI. However, tenants pay into a company account. How should I do my year-end tax for my company?
Well, that's
This relates to the governance
and
piece
mixed
that you
mixed,
gave in our last session.
mixed records
Yes.
keeping, and as such, you need to prove that that money is not business income of that company. Otherwise, KRA might tax the company against that. You have to And that is why Regina has said separation of records, very key, because you don't bring confusion. So when you notice that, please correct your records keeping.
Okay. And that brings me to a thought. So I have a company where this rental income is coming every month, say 100,000. Then I decide to not treat it as rental income. I treat it as corporate tax. So then I go to my bank statement. I see I've recovered cumulatively 1.2 million shillings. Then I do all my deductions. And then I file, after I've paid salaries and everything, then I file tax based on that. So it wasn't rental income. I didn't declare to the taxman that it was rental income, but I've been paying tax on the total amount correctly if I was to do corporate tax. How would the taxman treat me?
So you see, ideally what you're speaking of is that you're in the annualized system and not the monthly system, which is still okay, because as long as you're able to prove that you have received this income together with your business income, in some instances you'll be required to separate source, but you have taxed it through the normal 30% and you've taken the expenses that are allowable for that expense, and then you paid your 30%, you've self-assessed, you filed your returns, you've paid your taxes, all good. But remember, now you have to be in the annualized system and not in the 7.5 monthly returns one.
So I'll not have told the taxman. I'll just be putting all, including my air ticket. Lump it there. Because I've not said I'm an MRI, right? I've not said I'm an MRI. So if the taxman comes, I'll show him. I actually received 1.2. I've done deductions for all this. I have receipts to show it was an air ticket. So it's a corporate. I've done corporate proper books of accounts. I've done everything. Then I just apply the 30%.
So remember, any tax that one pays is aligned to the tax obligations assigned on your PIN. So if you have a registered property, and that is where the leakage KRA is looking at, we'll have to align with the number of commercial and residential properties, high-rise, we all have all along, such that the link of that building to the owner and whether verified whether they are registered for rental income, and checking what kind of income is declared by them. So if you have a company, that company must have various tax obligations on their PIN. So if you are an individual, you need to say on your PIN that the primary tax obligation is ITI, individual, and MRI, meaning MRI signifies that you have rental income. So there is no way you will have to mix things that are not aligned to your PIN.
And remember, if you end up doing the 30%, you failed to file your returns, the monthly returns, those are penalties for not filing. Because as Martin has said, you have the obligation. Yeah, so you have to honor the obligation.
Okay, thanks. This is an interesting one. And Martin, this speaks to what you talked about, ownership of property. If an individual owns a residential property generating rental income within the 288,000 to 15 million threshold, will it be permissible for the individual to avoid MRI taxation by claiming that the rental income is distributed among siblings? In other words, can the income be apportioned among family members for tax purposes even though the property is owned by one person?
Wow.
Which is very common. So Collins owns the property because the property is registered under Collins, but the rental is the rent collected is passed to siblings. So Collins, here I'm assuming that Collins is the owner, then my children, my many children are the ones distributing the rent.
We need to look into the governance because that speaks to the governance, whereby you have the parent as the owner of the property, then distribution. So how is this income collected? So who owns this?
The owner is Collins Wanyonyi.
Fine. So you are the one who have the obligation to pay MRI.
But the recipients of the rent is Regina and Martin and...
Those are, I would assume that those are back office arrangements. As such, the owner needs to account for MRI, and the distribution is now the after tax.
Okay. That's fine. I think Joseph has come back. Hello, about the housing levy, what do you mean when you say the 10 friends are the ones to cater for the 1.5? How do we file this since we don't have employees?
Remember, housing levy is on individuals who are earning income in Kenya. So it's not a matter of the company having employees. You yourselves as individuals who are earning income in Kenya are subject to housing levy. So you are required by law to account for that and make payment, yes.
Thanks. So my viewers, in the next minute or so, you'll be getting a poll coming on your screen. Please just take a minute to look at the poll. My viewers, in the next minute or so, you'll be getting a poll coming on your screen. Just take a poll on the screen to guide us on how to do this better. As we progress, we have today almost everybody is anonymous. Martin, you need to tell the taxman. Yeah, quite a number of people are anonymous. If I have a flat that has 20 units and in a month all the tenants don't pay, do I just pay the MRI for the tenants that have paid? Or would KRA want full cause? Maybe while registering, I mention number of units in the whole establishment. I think there's a discrepancy here.
Yes, pay on the collected.
So there's a bit around filing for MRI. So you have to go in, then you register, then you indicate I have 20 units, each unit is 10,000. Then only 5 units
are paid. Yes.
So how do you, and Callista's mentioned that KRA went for him to then say you've
Declared.
declared.
Yeah.
Maybe some clarity there.
So remember, you'll be asked for your bank statements or M-Pesa statements, which will show, indeed, yes, it was those 5 people that paid in that month. Or no one paid, and therefore you're doing a nil return. So you pay tax on what you have collected. You can't say that you'll pay on their behalf. What if they never pay? You'll end up going at a loss. Okay. So records.
So just record.
Yes.
Pay, give Caesar 0, and when Caesar comes, so how will you prove that this building was vacant? I'm just trying to imagine. So you have a building. How do you prove that it was 50% occupied?
Okay.
Tenancy documents?
Remember, sometimes back we also had what KRA was talking about was block management, whereby they take a street and they go around and take a survey, get to know the market rate of the residential rents around. But then they await, they wait for you to do the disclosure. There would be a trail. Kenyans, as far as I've been in this space, we don't believe in a cash accounting. And as such, we believe there must be a way of collecting money. And so you may be put to task to prove that there was no occupancy of the properties. Otherwise, you'll be asked for bank statements, the M-Pesa records, and they may, if it is extreme, they may lift the veil if it's in the form of a company. Yes, lift the veil of incorporation, whereby now they go to the owners, the directors or the shareholders.
And then, if I may also, they also look at trends. So you can't say that in 1 month I had 1 tenant, the next month I had 100, then the next month after that I have 20. There's also how the trends that you have.
The normal trends.
Yes, the normal trends. You don't expect such swings, especially in rental income.
Okay. And that brings this very nice question here. What happens to those Ushago landlords with 3 to 10 houses rented out for business or residency who don't keep any record? Rent is paid in cash or M-Pesa? What's the worst that KRA can do to them?
I would say that the administrative costs to administer on tax collection to the informal as you may say, informal sector would be too much. So a landlord in those Ushago places and the tax station is very far, they would be lucky. But if it is where the KRA would always make visits, they may be compelled. And also, what would be the income derived from such? We know the rates in the upcountry. They may not be so much.
Yeah.
And as such,
There was social media posts sometime last year but one, where KRA had picked NYS officers to walk through businesses.
yes.
I didn't see any, but I saw those posts. Yeah. So maybe it's also a way of just trying to have many boots on the ground to just do tax.
Well, KRA need to be very targeted on the approach. If it is a targeted enforcement, they need to know where are they targeting, not just anywhere.
So I know you're running. We should be closing in about 5 minutes. I'll take this last question, and after this question, we'll be picking closing remarks from the panelists. This is a very interesting one. Do you still pay 1.5% housing levy even if the monthly residential rental income is below 24,000 per month?
Okay.
Yes, Martin.
No, because the income is not within the threshold. Yes. We are saying we are not taxing poverty.
That's true.
Oh, we are not. So if I'm not if I'm not eligible for tax, then I don't pay housing levy.
Yes.
Oh, okay. This one, allow me bring it here so that we end it with it. My anonymous question hasn't been answered. If I'm a landlord and I have 3 different flats, do I pay MRI for each individually, or can I register all under one limited corporate, then just pay MRI 7.5% once?
Since the earner of the income is one, then you combine everything.
Yes.
You combine everything, and then you do your MRI.
Okay. Thanks. So viewers, I guess we've tackled about 90% of your questions. We've also addressed quite a number of the items. If I've not mentioned your name or some of them were anonymous, it's because some of the questions were repeated and a little bit of them covered. So I guess we've covered not 90, actually 95% of the questions that have come. We'll be running another session on 26th of March, and in that session, we'll be tackling tax in the oil and gas space. So the customers will be targeting are the customers who are running the petrol stations and the likes. So we know there's an expectation from you on how to manage tax. Martin here was saying each time somebody wants to comply on tax matters, he has to come to you so that you give them an ETR. So we'll be guiding our population around how that is handled. Today, we've been handling rental income for corporates and for individuals, and we're just trying to help our viewers understand that. So I'll invite Martin for some closing remarks.
Thank you, Collins. Again, we appreciate the opportunity to serve our mutual clients. We as NITRAM accountants and NITRAM advisory, we are ready to journey with our mutual clients to these on this compliance journey. So we look forward that even after sessions, we can still engage.
Thank you. Regina, closing remarks.
Just to say thank you for the opportunity. The discussions were very good and vibrant. I think what I've spoken about all through is record keeping, very important. So I think that's the parting shot for me, that rental income earners keep good records for just in case KRA have a review, they're able to corroborate their numbers.
And just before I give my closing remarks, I want you to watch this one clip. Thanks. As the clip keeps coming, so today's session, we were running, as I said earlier, a session on rental income for corporates and individual. We've seen the importance of record keeping, as Regina has emphasized. We've also appreciated the importance of self-declaration, and that becomes a very critical pie in you addressing the needs of the taxman. Next, our next series out of these sessions, we'll be running a managing tax for oil and gas. It will be very critical for us to just enlighten our viewers on how to manage the tax matters. For example, those who want to claim on on fuel and the likes within the business. The other piece that also be, we have another series of items that will be coming up. So other than the poll that you filled in, on the chat, you can just give us a comment on what else you'd like us to cover. My name is Colin Sonyonyi. I serve at Equity as Director for SME Banking. Good to have you and have a good morning. Thank you.
Thank you.